Gotcha, bitch.
Okay. You guys see by the title. Um, we're gonna talk about fibs today, man. We're gonna show you guys how to use fibs. Um, I would suggest that you don't use fibs alone, right? I suggest that you use um, a, a combination of things to help your trading, right? Fibonacci is a great tool to help, especially with supply and demand, prime reversal zones, support and resistance, EMAs, all those different types of things. Basic pattern recognition. All those things really help when it comes to. So I can't really hear myself. Let me make sure my shit is turned on. There we go. Okay. Oh, excuse me. So basically, all that stuff is really used, right, to help um, confluence your different types of trade ideas, right? So the way that I use fibs, right? I use fibs for pretty much everything. You know what I mean? I use it for gold, use it for US 30. I use it for forex, crypto. It just kind of helps as a confluence for me, right? The main thing to take away from this video, if anything, is to find something that works for you, add things to it to further your trading career, right? I'm not a beginner, let me not cap. I've been trading for about 5 years. Um, on and off, I was a football player, college football player, a little background about myself. So, I was with it on and off. I just became profitable. I'm not getting tongue tied. Excuse me. I'm sorry. I just started making money. Not crazy amounts of money, but made decent amount of money to where about couple steps away from eventually doing this full time, cutting my job and putting my all into it. Um, I'm just going about it the smartest way possible. You know what I mean? So, anyways, let's get into the video. Let's talk about these fib stuff. I think I did enough jibber jabbering. Yeah, jibber jabber for about 2 minutes, so it's good enough. All right. So, um, aside from this humongous news candle, let's try to ignore that. Okay. Uh, what I have found out is that fibs actually work really good in terms of larger time frame, right? They have a very good, very fluid structure within a higher time frame. Meaning, right? Meaning that on a lower time frame, we know that price is fractal, right? We know price is fractal. So on the higher time frames, you see this, right? Higher time frames, Higher time frames, you see this. Don't mind it. I made it ugly. It is what it is, right? Higher time frames, that's what you'll see, right? On the lower time frames, what the fuck? What the hell's wrong with me? How did my fat fingers do that? All right, excuse me. We do it live, guys. I'm not editing it. Nope. This is how you gonna get it, right? So, like I was saying, higher time frames does this. Higher time frames, you get that, right? Big old W. Lower time frames, you get beep, 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 bow, 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 bow. Okay, so you get the point. That's what you get on the lower time frames, right? So, automatically assuming, right, on the higher time frames, things are going to be more clear cut for you to see. So, with that being said, it's good to use the Fibonacci on a higher time frame. Okay, higher time frame, so it can just add to the clarity of the chart, right? So, I have a couple different fibs that I use, right? I use my range fib. I have a Fibonacci that was inspired by Cubanks. I have a Fibonacci that was inspired by Bullseye. All these different things, I've added my own tidbits to it to help me, or what I see that happens on a chart a lot. I added those things to further add to my portfolio, my collection, my type of, my playbook, my swag, basically my swag. So, meaning that ultimately, right, in this game, it's good to get a mentor, right? But at the end of the day, you have to do what's best for you. I have to do what's best for you. Okay? So, if Bullseye has a really good Fibonacci, but you see that it really doesn't work good, so you tweak the settings to where it kind of makes it a little bit better for you. Same thing with Q Banks. You see that, oh, his Fibonacci works really good. But it's a little off here, a little off there. It kind of doesn't work with my system well. Let me see if I can tweak it to make it work with my system, right? As soon as you do that, then it is yours now, right? It's yours. He may have given you, a piece to kind of help you out, but as soon as you add that curveball, add that twist, it's yours now. That's just how I think about it, right? So, I'm not. No matter how rich I get, I'm never paying for TradingView. Never. It's never happened. Never gonna happen. Never gonna happen. So, all right, we're on a 4 hour. That is the highest that I would like to use the Fibonacci on. I really don't want to go any higher than that. I don't want to use it daily. I don't want to use the 6 hour, whatever. I don't want to do it. 4 hours good enough. Intraday worked. Splits my day in two. Right. Splits it into the lunch session, from the morning to lunch to the afternoon session. Right. It splits it up into those two things. That's why I think the 4 hours is great. Right. Because a lot of times during the New York session, you will have a lunch reversal. Right. So people go to lunch, reverse their position for some reason, take money out the markets. Markets will drop if it's on a bull. Sometimes it'll add positions on because it was already in a bullish bearish run. I don't know why it is, but normally you'll see that kind of trap that happens within the midday session. Excuse me. So that's why I like to use the 4 hour. And I'm going off into a whole different tangent about midday traps and all that other shit. But I just want to give you guys the idea of the reason why I do it on the 4 hour. This is why. You know what I'm saying? So we'll just draw it out. Okay, boom. That's the right one. Here it is. Point A. This is where it gets tricky for a lot of people, right? The best way to do this, right, is to do it within the operating range of what's happening, right? The most recent price action, right? So, for example, right? Let's go over here. You see these double tops. You see that liquidity is being engineered here, right? You see that money was spent here, business was conducted in this area. Okay, you can see that those things have happened, right? Every time we reach this area, we sold off. From the last, basically from the beginning of the last week to the end of last week. I'm sorry, and all of this week. Every time we reached, wow, that is ridiculous. I definitely got to cut that out. Whew. Anyways, we have reached that zone. It has always reversed, right? So, from that, we understand where price wants to go, right? Price is drawn from external to external liquidity, internal to internal liquidity, right? So with that being said, we know where price wants to be at. So this is where we see, because you can draw your liquidity zones, right? Say for example, you have your operating range. Let's just ignore this stuff right here, right? Ignore this stuff that kind of happened this week. Say that we're starting off on this Tuesday or whatever, right? We have an operating range right here, right there to right here, right? that's our high, that's our low. This is an operating range. We understand that when price is previously being engineered at that section, at that specific zone. So we understand that price has a strong reaction from that zone, right? We've seen it happen twice. So 9 times out of 10, it's probably going to happen again. You know, this game is based off probabilities, right? So we see that. Boom. We see boom. We see boom, right? 2 areas of engineered liquidity if we ignore the previous stuff, right? Or if we ignore this stuff, we see those 2 previous areas of liquidity. So from there, we take this and we go from a high to our low point. Now our standard, I have edited my fib because I don't really like that line, because I like to add lines at different types of things, so it kind of gets them in the way. But there is normally a line between the 2 blue dots, right? That line shows you where you're placing your fib. So you go from the highest point to the lowest point. If we're looking for a rejection off of an area to go bearish, right? If we're looking for a bullish, we're going to go from low to high, and we're going to see that rejection point off of that bearish area. I know it's annoying, but just think of it in reverse, right? So I'm looking for a bearish run. So I'm going to go from the highest point to the lowest point to see where it's more probable to react off of. Simple. Vice versa, if you're looking for a bullish run. So here we are. Real quick, we will. Here are the levels to the Fibonacci. I don't really know if you can see that too well, but it is 0, 0.236, 0.382, 0.5, 0.618, 0.761, negative 0.618, 0.886, 1.618, 1.1, 1.2, negative 2, negative 2.272, 1.272, negative 1.618, negative 0.27. That's what it is. I also have background completely turned off. I have prices turned off. I have levels here. Put them to percentage. I have my text center, middle, front size is 11. I have also removed the trend line. Okay, cool. So, as we see here, right, we see that price, once it gets to this 100% area, it has a strong indication of rejection downward, right? So from there, we understand this, right? We see that we're in an operating zone. We see that liquidity is being engineered here. So what we're going to do is we're going to expect a rejection off of the 100.0 of the 100 level, right? Because we know that previously, before, when it got to that level, twice it rejected off of that level, right? We know that this is also the high of the range that has been tested twice, right? It has been tested twice, and it has rejected both times. So let's go into let's play it out now from where our low point is at, right? So from the 4 hour, we see that we have 2 strong bullish candles indicating, you know, we're in a slight bullish run, right? In a slight bullish run, we know that previously at this zone, at this area, that it has rejected all of it strong. We have 2 strong rejections off of this zone, right? So anywhere between that 100 and that 88 level, we're expecting a rejection from that zone, right? Now this is where this is where price becoming fractal comes into play, right? Let me clean this up. Like what? clearly don't want to get rid of the Fed. Be smart. Come on, guys. Use your head. All right. Drop down to the 15-minute or the 5-minute, whichever one you like to be. I like to look at the 15-minute too, and then I'll look at the 5-minute if I need a little bit more precise action. It just kind of depends, right? So I want to ignore this big old news candle, right? Because at the end of the day, before that news candle, we still have the rejection, the price action that we wanted, truly. You see what I'm saying? Just using the Fibonacci, just using liquidity, just using the operating zones. We got the reaction that we wanted, okay? Before the news even came in, all right? So as we see, right, as we can see here, we have a lot of rejections, bro. A lot of rejections off of this 100% and this 88% level. Oh my God, you guys can't even fucking see that shit. I'm sorry, guys. My shit's a little fucked up. I promise you, once money, we'll be good to go. All right. I'll start upgrading my computer and shit, but you know, niggas got real life issues. But anyways, right? You can kind of see it though. Right here, 100% level. Right here, 88% level. Right. Then we have an operating zone or green level right here. We have all of these rejections off of this zone, right? I know you guys can't really see the wicks, but you can still see the bodies. So either way, you see that there is a rejection off of a certain point, right? The cool thing about it is that if you watch some of my later videos, I actually explain that this is actually the fair value of the range within the range, right? So it's some cool shit, honestly. Okay, a little sneak peek. If we have that range, that 100% range and that 88% range, right, within supply and demand concepts, right? The thing about the way that I trade, I combine some supply and demand, I combine some support and resistance, and I feel like that is the best way to trade, right? Because in a sense, support and resistance and supply and demand are basically the same thing in a sense. So the cool thing about it, right, is that within that 100% level and that 88% level, right, if we take that box, we make a box, and then we put the middle line in the middle, right, that is technically our fair value level. Technically, right, it is the middle of the zone. Our premium level will be at our top, the discount level will be at the bottom. The cool thing about this price action currently on the 15-minute chart is that it is rejecting off of our fair value within our zone. So, meaning that people are buying price at fair value. I mean, they're selling price, at fair value, right? So, we even know that if it does reach up to premium, we will see a big drop. More than likely because of the fact that institutions want to drive price at premium to sell off at the premium price. So that's what your fib is doing, right? Your fib is helping you spot within your operating range where exactly is price action within the premium and discount level, right? That's how I look at it. So we got our projections off of there, right? Then when price finally reached our premium zone within that 188% level, right? It sold off something crazy. Buyers came back into the market because on a larger scale, on the higher time frames, we are right around our fair value price on the larger time frame, right? So people bought price here, which drove price back up to our premium we want for it to sell off again. So basic concepts, right? If we were to go for a trade off of our, let's just say the first rejection we got, right? I'm not saying do this. I'm just saying if we're going to base it off purely off of the fibs, if all you're going to use is fibs, I strongly suggest not to only use fibs and confluence with other things. But if you're going to use the fib, right? And you wanted to buy price as soon as it got into our premium zone off of rejection here, you would have made go here. We're gonna put it right above that previous high, that initial high that started our range. We'll put it right above that. Yep, there we go. And then we'll just go for a simple two. Okay, update my damn video. Let's go for a simple 2-to-1. 2-to-1 or 1-to-1, whatever you want to do. You would have made your 2-to-1 within that 15-minute chart. Within that 15-minute, the 15-minute candle. If you would have waited, you would have made it again. If you would have waited 45 minutes, you would have made it again. So, I mean, it's pretty basic stuff. And then if you would have went for another trade off of the rejection off your premium zone, do the same exact thing, go for a 2-to-1, you would have got it smooth. So, I mean, that's it, man. That's the end of the video, man. Like, you know, can't make it more simpler than that, right? That's, I mean, that's the easiest way to do it. You know what I'm saying? That's the easy way to do it. Kind of some tips and some pointers to it. There's two ways you can look at the fib, right? You can look at the fib as support and resistance levels, or you can look at them as levels of more detailed of premium and discount, right? It depends on where you're putting it at in your system, what trade you're looking at it in, you know, things of that nature. For this example here, we use it for premium and discount. There's other times where we would use the fib as a support and resistance. Sometimes on a higher time frame, it appeals to be support and resistance, but when you go drop lower, it's actually supply and demand or premium and discount. It's just within the context of how you're trading it, right? It's very situational, and it's very much so something that comes with a little more experience. So I would suggest to, you know, back test it, play around with it, figure the levels out. If these levels don't work out for you, maybe shorten it down. Maybe take off the the 110 or the 120, or the 88 level, 61 level, whatever. The most probable places though are the 78.60, 61, 38, 23, at least in my opinion. Okay, from what I see happens a lot. Yeah, man, I mean, that's going to be the video. Let me know if you guys understood it. Excuse me, if that makes sense to you guys. If not, I'll do a part 2, maybe slowing it down. This video kind of had nuggets for, maybe your advanced, your intermediate, and your beginner. Rewatch the video a couple times if you need it. Whatever need may be. You can always DM me on TikTok or Instagram, and I will gladly answer any questions you guys want. And yeah, man, that's gonna be about it for me, man. I really appreciate you guys watching the video. Like it. I'm monetized, broke, so that would be great. Like the video, comment on the video, share the video. Peace.